Hey guys, welcome to the first lesson of Selling Your Business course. So this video is going to be an overview of what you need to know and prepare for in order to sell your business. So the first thing is, with your business, in the first place, you want to start with your exit in mind. So build your business to sell. That means keep things organized in a way that you can easily transfer all your assets when you're ready to sell your business, because the most annoying thing is to go to sell your business and everything is disorganized. You don't even know like the passwords for your accounts, and you don't have your books in order, and things are all messed up. So you want to make sure that from the outset things are organized. The most important thing when you sell your business is know your numbers. So you can find your numbers in your Shopify dashboard, and you should definitely be using that bookkeeping spreadsheet that I provided you in the very beginning of this course to keep track of your books, your income, your expenses, and everything that is an invoice from your supplier. You should keep those in Google Drive folders. Basically, you need to be able to provide proof to your buyer that you are actually making the net profits that your business claims. So you need to also prepare your financial statements. Financial statements are your income statement and your balance sheet. Those are the most important financial statements that you'll have. And if you don't know how to do that, just contact a bookkeeper or accountant and they can prepare those for you. The bookkeeping sheets are pretty much an income statement. Your balance sheet is pretty much what your checking account says at the end of each month. But you need to prepare official income statements in order to be able to transfer your business. This really kind of depends on the buyer you're working with as well. If it's an actual investor, someone who has a lot of money, who's done this before, they're going to ask for all this stuff because they know what to ask for. But if you're trying to sell your business to like a private buyer, somebody who doesn't really know what they're doing, who just wants to buy their first website, they might not know what to ask for, and so you might not need to provide all of these things too. So keep that in mind. If they're not asking you for this stuff, you don't necessarily need to provide it to them, obviously. Provide a list of all your assets. That's really important. This is going to be the same thing basically as your accounts tab. All your accounts and passwords, all of your suppliers and the approved suppliers tab in your master spreadsheet, and all of your any other like software vendors or Shopify app vendors, that kind of stuff. Those are all the assets you're going to be transferring. You can choose to sell your business through a broker, or you can sell it yourself to a buyer on a platform like Shopify Exchange or something like that. So those two ways, one is easier, the broker, because if you go through the broker, they're going to kind of facilitate the transaction for you. They'll find you a buyer, they'll market your site, all that good stuff. If you try to sell it yourself, you're going to have to deal directly with potential sellers or potential buyers, and yeah, you're going to be transferring the assets yourself. A broker should transfer the assets for you and also facilitate the transfer of the funds through either a escrow of some sort, or usually it's through an escrow. If you sell it yourself, then you have the option of just having them directly wire the funds into your account. But usually there needs to be trust built up, like you need to have known these people for a while. So the best place to do that is like through networking, like at conferences and events with other internet marketers and dropshippers, e-commerce people. If you find somebody and you meet them and you trust them for a long time and then you sell your site to them, they'll probably just wire the funds directly to your account because they trust you and they know you. You're not just going to run off with the money. All right, so if you choose to sell the site yourself, then you're going to have to do what the broker does for you. So first of all, you're going to have to market your website, which basically means posting it on a website that's free, like Shopify Exchange, for instance, or going through your network or going on social media and asking if anybody's interested in buying a website. You can post to the e-commerce paradise group. You can post to other groups out there on Facebook. You can ask all your friends. Post to Shopify Exchange, things like that. Most other websites are going to charge you some sort of a fee to list your website, or at least a fee on the sale of your website. So once you market your website, and keep these things in mind when you're marketing your website, that copywriting matters, guys. Like, it matters when you sell anything, especially your website. You want to boost up how awesome your website is. You don't want to talk about future goals or future potential growth, because nobody cares about that. The only thing they care about when you're selling your website is what you've done in the past. Your past sales, your past net profits. Those are the only things that really matter to anybody who's going to buy your website. Okay, so just focus on that. Just the data, traffic sources, traffic numbers, number of suppliers. Every little key data point you have, you can find all this stuff in your Google Ads account, Google Analytics, and your master spreadsheet. So just make sure you list everything out there about your website, and people should be easy to go ahead and buy it. And you'll probably get lots of questions too, like, hey, what about this? What about that? What about that? And make sure you have then update the post with an FAQ question or an FAQ section. with the answers to those questions. All right, and then once you find a potential buyer, someone contacts you, they're interested, usually the process you go through is you get some sort of a deposit from that person, whether it be as low as $50 or $100 or as high as 5% of the listing fee or the asking price. Some sort of a deposit. In other words, they like put money in your PayPal account, and then you have them sign an NDA, which is a non-disclosure agreement. And I'll link below in the lesson to a sample NDA you can use, but have them sign that. It's just a legal document that says they can't go around and tell the whole world about your website. Now, actually enforcing something like that is pretty hard to do, obviously, but if you do find out that they told their friend and then they started a competitor site, you do have some legal leverage. And if you did want to have a lawyer send a letter to them to take the site down, you could do that. Now, if you wanted to actually try to enforce that even further, it'd be kind of difficult. So what does an NDA actually give you? Not a whole lot, but doing it does put that kind of pressure on that person to not go and just tell everybody about it. It's kind of like a promise that they're making to you. So have an NDA, have them sign out a simple NDA before you show them your website, and it makes it a way easier thing to get started with. So you're going to be talking to the buyer, you're going to be negotiating the price with them. They're going to look over your website, look over the assets, see what they think, see if it's something that they're willing to purchase from you. And at that point, you'll probably get some sort of an offer from them. Now, the offer probably is going to be lower than what you wanted. That's usually how it works, and you have to negotiate your way back up to what you wanted, which is the asking price. That's why I usually put my asking price higher than what I actually want, about 20 or 30% higher, because then that way I know they're going to probably offer 50% of that or less, and I can work my way back up to what I actually really wanted. So if you want to sell your site for $100,000, start around 125 or 130. They're probably going to offer you 50 to 70, and you can work your way back up to that 100, so or whatever, 90 or something like that at least, so that you can get close to what you wanted for your website. Now, as far as price goes, the way you determine your value of your website is, on average, sites that have everything really well laid out, have a lot of suppliers, have a lot of products that are selling well, and have one VA managing the store can sell upwards of 30 times the monthly net profit. So if your monthly net profit is $5,000 and you multiply that by 30, you'll get $150,000. That's what that site would sell for. But if your site is kind of all over the place, you have only a few best-selling products, it doesn't have as long a history. Like that site that would sell for 30x might have 1 or 2 years of history, maybe longer. If you only have like 6 months of history to a year, and you don't have as many suppliers, not as many bestsellers, your traffic sources are mostly through one source, you might get as low as like 15 to 20x. So let's just say on the 20x spectrum, let's say you're making $5,000 a month, but usually that's not average. Like let's just say you're more beginner, so you're making $3,000 a month, and you're at that level, so times 20, you're getting closer to $60,000 for a website. So keep that in mind, guys. It can usually be much more profitable for you to keep the website for another 6 months or a year or 2 years and continue to grow it and scale it before you sell it, because you'll get 2 or 3 times as much money for it or more. And who knows, maybe it might even grow way bigger than you think it would. But usually people are selling their website for other reasons, like their partnership broke up, or like, they're just tired of the niche or whatever, they have to move, or they're doing a different business. So, obviously you just kind of have to take what you can get. But usually it's somewhere between 20 and 30x. The only reason it would be below 20x is if you really just can't find a buyer. Maybe it's like a fringe industry. It's really risky. Like the more risky your business is, the harder it's going to be to sell and get a price you want it for it. The less risky your business is, the older the industry, the better the suppliers, the higher the keyword search volume, the bigger your email list. These kinds of things really do have an effect on the multiple of your business. All right, once you come up with a price, negotiated a price and cleared it, you're going to be setting up escrow and getting payment from the buyer. So escrow.com is usually what I use if it's a private sale, or if you go through a broker, you can use their escrow service. Or like I said, if you trust that person enough, they can just wire the funds directly to your checking account, and you can begin the asset transfer at that point. Then you'll be transferring all of your assets, which basically just means transferring all the accounts to that person. So give them your master spreadsheet, they can log in. They're going to change, number one, all the billing information on the accounts that cost money, and they're going to change the passwords on all the accounts. And then that's pretty much it. So they'll take possession of all the assets, including your Google Drive, which will include your logo and your banner and any content that's in there, supplier invoices, all these things. These are all really important for the transfer of your business. You want to confirm, of course, that these assets have been transferred. And then as soon as they have, if you're using escrow, you will release the funds. And then after that, you just have to provide support to the buyer. Usually it's like 30 or 60 days or something like that. You provide support to the buyer. All right, guys, so that's the overview lesson. That's the process in a nutshell. Let's go a little bit deeper into the process now, and I'll show you what it's like in the following lessons. We'll see you there. Hey guys, Trevor here. Welcome back to the second lesson of the Selling Your Business module in the High Ticket Dropshipping Masterclass. In this lesson, I'm going to go deeper into the valuation part of your business and how to value the price for your business sale. All right, so let's get into it. Number one is that the valuation basically is your monthly net profit times the multiple, plus any inventory or supplies or equipment that you're going to include in the asset sale of your business. Now, most of these businesses are run from your laptop, from your home office, so you're not going to have any inventory, supplies, or equipment. But if you've grown to that level, maybe you have a multi-million-dollar a year business, drop shipping, you have a warehouse now, you have returns, you have, or maybe you've purchased a bunch of your best-selling products, that kind of thing. And you want to include that in your sale, you would add that price onto it, and they would assume that, and then that goes on with your sale. And that does happen in some bigger sales, obviously. But that's your valuation. Monthly net profit times your multiple plus inventory, supplies, and equipment that you include in the sale. Now, your net profit is your revenue minus your cost of goods sold minus your expenses. I'll say that again. Revenue, which is your total sale amount, minus cost of goods sold minus expenses. So when you make a sale, sometimes you have discounts, right? That is included in your revenue. So it's revenue equals your sale amount minus your discounts. That's your revenue. And then you have your cost of goods sold, which is the invoice from your supplier. And then you have your expenses, which are like your Shopify hosting, your G Suite account, your Grasshopper. All those are your expenses, your monthly expenses. Now, the key is with your business, with expenses, is that you want to only keep track of the expenses that are directly related to managing your business. You don't want to be putting a bunch of expenses from your traveling and other things like that that aren't necessarily directly related to your dropship store into your bookkeeping spreadsheet. The reason why we set up these umbrella LLC businesses is so that you can have a separate bookkeeping spreadsheet and keep track of all those personal expenses in there. Because when you file your taxes, what you're going to do is be filing your taxes as an LLC. You can write off all the business travel, the home office expenses, stuff like that to your taxes. But for your asset itself, you don't want to be putting those expenses into that bookkeeping spreadsheet. You want to keep it separate. So have one bookkeeping spreadsheet for your LLC. This is what you'll do to file your taxes. Have a separate one for your dropship store. This is one to be directly, specifically related to the expenses of your dropship store. Now, as far as the valuation goes, the multiple, you want to most likely have a 12-month average. That's the ideal because buyers want to see a full year average for seasonal businesses. Most businesses have some sort of seasonality, some don't, but they want to see like, okay, was there a downswing in the fall? Was there a downswing in the winter? Was there a downswing in the summer? They want to know when those downswings are and when the upswings are. Usually there's an upswing around Black Friday, but sometimes businesses are really high in the spring or really high in the summer, that kind of thing. So they want to see that. So 12-month averages are ideal. If your business only has 6 months of history, it's usually not going to be enough to get you a high multiple. You're going to get a lower multiple because it's more risky. They don't know. All right, now we already discussed in the overview video the average multiples you'll get. It's usually between 20 to 30. Usually on the lower end, it's because it's more risky. You don't have as many suppliers, don't have as many best sellers or traffic sources. On the higher end, it's a more filled out business. You have lots of suppliers, lots of best sellers. You've been around longer. You have lots of content on your website, lots of traffic sources, a bigger email list, and you're generally speaking just a less risky business. So that's why you want to run your business, build it really good. You'll get a higher multiple for it in the long run. All right, and usually when you're looking at inventory, let's just talk about that for a little bit because some people have inventory to deal with. Inventory at cost equals the cost of landed in the US cost, not cost that it costs you from China. So that includes the freight costs. So if you bought like a bunch of dining room tables and had them stored at a warehouse, your best-selling dining room table for your store, you want to include the cost of freight in that. That's your landed cost. And 5 to 20% of the sales price is reasonable. And if there's inventory that's sitting there that's dead inventory, that person's not going to be interested in buying it. It's only going to be for inventory that's moving. So keep that in mind. All right, guys, so that's it for the valuation lesson. Let's move on to the next step in selling your business. We'll see you in the next lesson. Hey guys, Trevor here. Welcome back to the Selling Your Business module in the High Ticket Dropshipping Masterclass. In this lesson, I'm going to talk to you about how to prepare your high ticket dropshipping store to sell. So this should have been done in the very beginning. And if it hasn't, then you need to start doing it now if you want to sell your business. Always build these stores with selling them in mind. That's what I always do, because then you're going to keep them more organized and you're going to structure them appropriately, and it's just going to make it a lot easier to transfer them. That's why we use the master spreadsheet, because it keeps things really well organized, makes it super easy to transfer. Last time we sold 2 websites, it literally took us about a half an hour to just move over the domains for each, and we even came up with a process to simplify that in the future. Now we put domains within Shopify so that we just change the password and the account owner on the Shopify account, and basically they have access to everything now. So there is a little bit of issue with the billing information. You have to make sure that you go through, or they go through and change the billing information on all the accounts. So it's good to keep track of which accounts cost money, which you can add in a column in the master spreadsheet, how much it costs each month for each account, and just make sure that either you or their person goes through and changes to their billing information on each account, or else you'll keep getting the invoices to pay for that website in the future, which has happened to us in the past. Now, first step, of course, in all this is creating your separate company. Creating an LLC for your dropship store. If it's already doing over, let's just say $30,000 a month in sales, it's really good to have a separate LLC for that company. It just makes it a lot simpler. That way you'll have a separate EIN, and you are going to have a separate business banking account for that. Although you're not actually going to be selling the LLC, it will help you as far as keeping track of net profits and keeping track of all the books and stuff like that. And when you provide your checking account statement, you're going to be providing proof that your bookkeeping spreadsheet is accurate. It will have all the merchant account transfers, which will also be shown in your Shopify store, but you'll also be able to see all the movements of cash coming from your checking account to pay off the cost of goods sold to your credit cards. So it's also really good to use one credit card per business. It's hard to do that sometimes. You don't have to do it. It's just really good practice to do it. So if you want to do things the best practice, it's to set up a separate LLC, separate EIN number, separate checking account, separate credit card for each dropship store. With that said, we don't actually do that because we have so many different dropship stores that we do all the time. It's only on the really big ones that we end up going and separating them from our main one and creating a separate thing. Anything over, usually it's about $100,000 a month. If it starts doing $100,000 a month in sales, it's so big now, just go and start an LLC, get a separate EIN, business checking account, and apply for a credit card at the business bank that you're doing the checking with. And if it's doing those kinds of numbers, you can just tell them and talk about your business model, and they'll happily set you up with something. All right, so ideally, your business is selling all under one LLC, and that's what you should set it up in the beginning as, and that's what I recommend. Again, it's not a stock sale. You're not going to be selling your LLC. You're just selling the assets. Okay, so it's really simple. This also is going to be important to understand come tax time for you as well, which we'll get into later. Make sure for sure you have a separate business bank account. If you don't, if you have multiple stores under one, that's okay, but you're just going to have to provide that bank account statement if they ask for it and highlight the specific transactions from your store, which is easy enough. You just download the invoices from Shopify that show all your merchant account transfers and have someone match it up with a highlighter between that and your business checking account. You can white out everything else. They just want to see that this is real, that you're not just placing these orders yourself. You know what I mean? Make sure you have your financials all laid out in that bookkeeping spreadsheet. That's really all you need. Have your income statement and cash flow statement ready. You can use accounting software like QuickBooks, but the spreadsheet is good enough. Your cost of goods sold, make sure that you have that really clearly laid out. Make sure you have all of your supplier invoices in Google Drive. It makes it way easier. And have a list of all the work that's required for your website. I think this is one of the most important things. They're always going to ask you hey, how much work does this site require? How many hours per day am I going to spend running this website? And my usual answer is 2 to 3 hours a day. Because what you have to do is you have to fulfill orders, you have to talk to suppliers, you have to talk to customers, and as things come in, you have to do them. Now that's if you're doing things yourself. 3 to 4 hours a day is, maybe even 5 hours a day is average for a big site, right? If you're doing things yourself. But the key is hiring a VA to run your business for you. Once it gets to that certain revenue point, you feel comfortable doing it. I usually recommend it's $30,000 a month is hire your first VA. Your VA is going to handle emails, live chat, phone calls, supplier relations, and customer service, which is going to take a huge chunk of your business out of your hands. You're still going to have to manage a little bit here and there, especially in the beginning, but hiring a VA is going to help you get a way bigger valuation for your business because you can actually give them your VA. Along with your business. So if you really want to get that like 30x or 35x or even up to 40x for your business, you're going to have somebody running your business for you full time, and you're going to have to transfer that asset to them. Now, let's say you hire a VA and you then open another dropship store, and you don't want to just give them that VA because you train them, and then you want to keep that VA for your other store. That's perfectly fine too. Just make sure you understand you're not going to get as high of a valuation for that business because that person is going to need to hire a VA. You can maybe work out an agreement where your VA trains their VA for a certain amount of time for a certain amount of money, or maybe work it into the purchase price, but that's up to you. So keep that in mind, guys. Don't try to cut expenses by getting rid of VAs or something like that. It's just kind of silly. People think that like, oh, I have all these expenses of a VA, it costs me $500 a month. If I got rid of that, then then I can lower the expenses. That's not how it works. Okay, so the VA creates a higher multiple, which multiples are going to bring you way more money in the long run. So don't think that way. Make sure that you have processes and systems in place for your VA so that it's easy for them to run your business. This just goes along with the training. Make sure that your buyer knows how these processes and systems work, at least a quick overview of them, so that they can understand what the VA is doing on a daily basis and try to help them manage things that get difficult. All right. Let's see. This is all about minimizing buyer risks, guys. You want to make sure that the lower the risks that they have to have your business and grow it, the better and the higher multiple you're going to get for it. I'll just reiterate this: multiple products, multiple suppliers, multiple traffic and sales channels. Those are the key things here. What's not going to get you as high a multiple is having just like a few products that are really good sellers, a few suppliers, and mostly just one traffic channel. And usually we do Google Shopping, that's like our main thing, but you should definitely be building your email list and emailing that list constantly, and building up your social media channels, and posting to your social media channels consistently. All these things are really going to help you in the long run as well. And then even practicing using Facebook ads, that kind of stuff outside of retargeting. Make sure that you have all your processes documented, not just like a system, but like an actual document or a video training that shows them exactly how to do it. So when you're training your VA, back in the VA training course, it's the same thing. You're going to be making videos on how your store works and how to run the processes of your store so that they can see that and they can actually do it. Now, what you could do is just give your VA your access to this high-ticket dropshipping masterclass, and then have them understand it from there, and then even have your VA film videos of themselves doing the processes, right, and then upload that to YouTube. So that's a possibility as well. Don't think that they can't film videos themselves. They are perfectly capable of doing that. They are smart human beings. All right, so just keep all that in mind, guys. A quote from the Profit Show, just keep this in mind. People, product, and process. Repeat that again. People, product, process. And it's the process that makes the engine work, right? It's the people that are there to run the show, you and I, as well as our VAs. The products are the best sellers. These are the products that are selling. That's what runs the business, and the processes of connecting our customers with those products and suppliers. All right, guys, that's it for the preparation side of things. Just get all your business assets in one place, and it's really easy to move these over. Let's get into the next lesson of the Selling Your Business course and take the next step. I'll see you there. Hey guys, Trevor here, back with the fourth video in the Selling Your Business module of the High Ticket Dropshipping Masterclass. In this one, I'm going to talk about the sales process, the actual process of going through and selling your website. It's pretty simple, but it can be confusing if it's your first time. So the first thing is to get the initial valuation for your site done. So you can either do the valuation yourself or go to a website broker service and have them value your website. And yeah, so just consider what you've done in your website and try to think of the multiple that you would put it if you were an investor. Somewhere between 20 and 30x is usually where I would put it. It just depends on the length your site's been around for and the amount of net profit per month it's doing, and if you have a VA running the show or not that you're willing to transfer with it. All right, guys, so come up with that initial valuation. Consider with that initial valuation if you should put it off for another 6 months or a year and try to sell it later with a higher valuation or not. It's probably a good idea if your initial valuation is too low. The time and effort to implement the changes versus the actual improvements are what matters. So if it's some kind of a thing where you have to sell your business, like I said, break up in a partnership or something like that, then you don't really have a choice. But if you can hold on to it for longer or buy out your partner and run the site yourself for longer, that'll make it worth more in the future, as long as the net profits stay the same or go up. Now, your business usually will sell within 2 months. You just have to make sure that you market it well and stay in touch with investors. It's a pretty simple process, and with sites like Shopify Exchange, there's always people looking to buy websites, especially if your website isn't worth over $50,000. It'll be pretty easy to find somebody to buy your site. If it's worth over $50,000 or it's like $100,000 or more, then you're definitely going to go through some sort of broker service that works with investors or network and investor circles to try to find people that have large sums of money to buy up investments with that can buy assets. But you're going to also, if you're going to be selling your website, you have to make sure it's really well prepared. You document everything for them because they're going to ask for every small detail. The documents need to prepare, again, profit and loss statement, cost of goods sold, and other expenses are broken down. Screenshots of your earnings, like your Shopify dashboard, verified during the vetting process. Questions about any opportunities like work required and things like that from the investor, things you're going to need to answer. And you're going to let them go through a vetting process with your website. It usually takes a few weeks for them to go through that on average. They're going to verify all your financials, your traffic sources, your products, your sellers. They're going to check you and your competition. They're going to make sure that this is a real business, that you are still getting sales during those 3 weeks that they're vetting your business. So you want to make sure that you package all the information for the buyers. It makes it a lot easier to transfer everything, to explain everything really clearly to them if it's all in one tidy little package. So however you want to do it, a Google Doc is fine. Just make sure that all the information is in there. Your master spreadsheet should have all the information that you need. Any additional things you can do, like having a video chat with them, are really good, obviously, and making sure that you build the trust there as well, and that you stay in communication with them immediately. Get them into your Facebook Messenger or WhatsApp, or with email is fine, but just make sure the communication is fast and quick and professional. And then you're going to be going through your negotiations, of course. And like I said, you talked about price, try to get the best price that you possibly can for it, and answer any more questions that they have. Have some more direct calls. They're probably going to have specific questions about specific things in the business. You want to answer those. And then you're going to agree on some sort of a price, and then they'll deposit into escrow or wire the money to your account directly. And you'll basically sign a simple asset agreement contract, which I'll include a template to that in the description of this lesson. It's really easy. It basically just describes all the assets, and also that once it's transferred, there's no refunds, that everything is done. So that's basically the asset sale agreement contract. And the asset actual transfer process we're gonna talk about that next, but it's really simple. And the seller is responsible for reporting that sale to their taxes, and you're responsible for reporting the sale on your taxes. All right, guys, well, that concludes the Selling Your Business module of the High Ticket Dropshipping Masterclass. In the future, and when I do sell a website, I will be actually documenting the process, recording it, and uploading it here, so you'll see those lessons here. For now, that's all the information you need to know in order to go sell your website. All the resources that you need to actually sell your website and the contracts are in the lessons, like I said. So if you have any other questions, simply comment below the videos and you can ask them, and either I or a member of the community will attempt to help you, as well as commenting in the Facebook group. All right, guys, so good luck with selling your business, and hopefully you get a really good payout for it. And the last thing, of course, is you want to celebrate. But again, don't spend all your money. So you want to make sure that you set aside at least 15% of that sale price to pay the taxes that you're going to owe on that. That's really important. And talk to your accountant about that, of course. Depending on where you are, maybe that tax is different. Usually it's around 15% because it's a type of sale that is an asset sale as opposed to a general income. So keep that in mind. The other thing to keep in mind is you want to save your money. So I would probably say, like, take a certain percentage of that and go spend it and enjoy it, but then take a certain percentage of that and also go and reinvest it in yourself, reinvest it in new business, that kind of thing. Make sure that you are not just spending all of your money because that's obviously a really bad idea. So, and then if you've sold your website and it's your only business, like that was your only website, it's a really good idea to get started with a new one right away. So get back to the first module and do everything over again in a new niche. Lots of more niches out there for you to build websites in, and it's easy to get going. So build a new website might take you another month, but hey, then you got another cash flowing asset and you're good to go. And since like maybe even you trained a VA up to this point, you can have that VA build the website for you, build you multiple sites, that kind of thing. So just start scaling your business from there. And hopefully in another year or so, you'll have another business to sell. So that's kind of the idea here. And now that you have the experience of building a website to sell and actually selling it, you can take that experience and multiply it and build more websites to sell and do a better job at it the next time. If your first one was kind of messy, maybe the next one will be better. So great, guys. And if you have any questions, of course, comment below. Thanks for watching. We'll see you in the next module. Take care. Hey guys, welcome to this lesson. This is the business asset transfer checklist lesson. In this lesson, basically I'm going to talk to you what you need to know to transfer the assets for the store that you're selling to the new owner. This also works if you're the buyer of a store, but for that you can go check out the Buy in a Store module. So here we are just going to talk about the 3 main assets you need to know to transfer first. Now obviously you need to have been paid for the store first if you're selling your store. Don't transfer assets until you've received payment. You can receive payment either through wire if it's a lot of money, or just through PayPal if it's under like a few $1,000s or something like that. So let's say you sold your store. The first step is to transfer your Shopify ownership. So to do that, if the new owner has a Shopify Partners account, they can request manager access via their collaborator to get access to see the dashboard. You might even do that earlier on in the process and do it as more of like a due diligence period step. But you'll also need to add a new staff account for that new owner, and you will have to make them the owner as soon as they've accepted staff account privileges. So it's pretty simple to do that. So just make a new staff account and then make them the owner. And then they will go in and make sure that they change the billing info and the business info on the Shopify hosting. Next step is G Suite. So G Suite, it's pretty simple. What I usually do as a seller is first I change the 2-step verification phone and the recovery email to the new owner's information, or I just turn that off altogether. The recovery email you may have to change, you cannot turn off. You'll have to go in there and see. But that's important because then you'll give the new owner the email address and the password, and the new owner will then log in and change the billing info and the business info on the G Suite account. And they can add all the aliases into G Suite under the user information. So that's pretty easy to do. From the one G Suite user, like support at whatever it happens to be, you can add info, sales, returns, so on and so forth. So it's really easy to do. Next is the domain. So as the seller, you'll need to go into your account, whether it be GoDaddy or Namecheap, and unlock the domain name, and then get the authorization code and send that to the buyer. And then they'll need to verify the contact info and initiate. And then you can verify the contact info and then initiate the transfer. The buyer will then go to GoDaddy or wherever and search for the domain, and then enter the authorization code and then pay the fee and I recommend getting the private registration. Now, caveat, if you happen to have bought your domain through Shopify, you just have to transfer the hosting access and then change the owner information on the domain. So it kind of makes that process a lot easier. So all the other accounts, it's really simple. Whatever account you happen to have, whether it be a Shopify account that bills outside of Shopify or other accounts, just make sure that you change
Basically, you're going to have your accounts in a master spreadsheet. So you're going to give the new owner all of your account information. You're going to then let them log in. They're going to change the passwords and the billing info and the business info on all the accounts. Okay. So just make sure that that's done and the assets are officially transferred once that's done, and then you're good to go. And since you got the money in your account in full, you are now free, a little bit more cash rich, and one less headache to deal with. All right, guys, so I hope you enjoyed this module. If you have any questions about the process or any particulars that I didn't cover, drop them in the comment section below. Let me know, and I will answer. Thanks so much. See you in the next module.
Hey guys, welcome to this lesson on asset purchase agreements, and if you need to have one signed when you sell your business. So it's really important to understand what an APA is, and it's basically an agreement between a buyer and a seller that finalizes the terms and conditions related to the purchase and sale of a company's assets. And the key word here is assets. When you sell your store, you're not selling your company, you're selling just your business's assets. So you can keep your LLC, your EIN, your business banking account, all that stuff, that's still going to be yours. You're just selling a website, which is a subsidiary of your business. So what an asset purchase agreement does is it allows you to have a legal contract filled out and signed by both parties, so that on the seller's side, you are receiving the cash in the transaction. So what is important is if the buyer just end up disputing it for some reason later on down the road or whatever, you can both rely on this contract called asset purchase agreement that should lay out clearly everything that is included with your website and what your responsibilities are as the seller and what their responsibilities are as the buyer. Okay, and if there's any disputes later on, you can go back to this contract, which is a legal contract. So you can click the link below. You can read this Wikipedia article. I'll include it. I also included a couple of asset purchase agreement examples in the description, and you can download those and use them when you sell your store. Just make sure as a seller you're getting one filled out. As the buyer, it really doesn't matter, right? Because you sent the cash to the seller. As a seller, you receive the cash. So again, you just want to make sure that there's no disputes later on and the cash ends up going back to the buyer and they still have your business, right? So you want to make sure that you end up keeping the cash and they keep the business, everything's hunky-dory, and you agree on terms. So as a seller, this is really important, especially if you're selling your website over $1,000. I'd say if you sell it for under $1,000, it's really not that big of a deal. Or anything over $1,000 that you sell your website for, I would definitely get an APA signed. All right, so click the links below if you need one of these, and thanks for watching.